I welcome you all, happy investors, the inspiring and aspiring investors, to this sector oriented video. Yes, this video and the next video is completely going to figure out how to do value investing while choosing a bank to invest your money on. Yes, all your savings which you have been saving since past few months or years, I am going to I am going to teach you how to invest in a particular bank which can make you real rich, which can give you 200, 500 percentage of profit in return. So yes, in these next two videos, we are going to learn about the ratios which are important, which are mandatory to know, on whose basis we can figure out which bank is best to invest your money on for long term purposes. A very good morning to you all. My name is Shubham Bisht and I welcome you all once again back to this amazing platform of YouTube named as Happiness Prime. This Stock5Prime video where we are going to learn about banking stock analysis. A few of the terms which we will cover in this video with the live examples are CASA percentage. You might have heard about the current and savings accounts. So that is completely related to CASA percentage. Then we will know about NPA, that is net non-performing assets of a particular bank. We will study that what is actually NPA means, and how to study the graph of NPA. Then we will learn about cost of liabilities. What are liabilities and how a bank can have higher liabilities or lesser liabilities. Then we will study about the advances growth, that how a bank makes profit and how a bank is determined as it is even getting profit or not. Is it getting good response in market or not? And then at last we will figure about capital adequacy ratio, that how and what is the importance of CAR percentage while doing value investing. So just let's start with the first term, and just keep your complete attention towards all the words which I am speaking. And if you have any doubts, pause and rewind. Pause and rewind, and you will get it completely. So I hope you are ready with your notes and pen, and let's begin with the first term, which is CASA percentage, current and savings account percentage. Now we all know about current account, we all know about savings account. A bank For a bank, current accounts and savings accounts are most important. Why? Because what is the purpose of a bank? Purpose of a bank is storing or keep taking money from most of the people and giving loans to other people. What is the main profit of banks? That percentage of interest the bank recovers from the people who have taken loan minus percentage of profit, percentage of deposits which the bank have to give to all the users which are having savings and interest account in the bank, is the actual profit of the bank. Of course many other ratios, but actual if you overall see, then the again I am repeating the same thing, percentage of interest which the people who have took loan from the bank, percentage of interest which the bank is getting from them, minus percentage of the amount which users have deposited in the bank. The major difference in these two are the exact real profit of the bank. So how bank will have higher profit? When the percentage of the amount which bank have to return to all the users is as less as possible, and this whole figure is as big as possible. The amount which should come from people, bank always wants the maximum amounts of saving account and maximum amounts of current accounts of the users, because banks have to give 0% returns on the current account. Banks gives maximum to maximum 3 to 5 percentage of returns on the savings accounts, and in compared to this, banks take 12 to 14 percentage of low of interest on the loan which banks give to other people, to the distributors, to the retailers, to the normal business owners. Banks take 12%, 14% of interest from them. So 14 minus 4 percentage is actual bank's profit. So right now, what most of the banks used to do to increase the current accounts and saving accounts in their bank, because there are many banks in the country. So every bank needs to have more number of current and savings accounts. So what they do is they increase to a certain limit. They increase their returns to the users who are depositing money in their bank and opening savings accounts. They increase as much percentage as they can. Right now, if I give you some examples, like SBI, which is one of the biggest and most reputed banks of India, it is giving around 3 to 3.5 percentage of returns on savings account. Secondly, if we talk about certain like Axis Bank, or you can say ICICI Bank, these kind of banks are giving around 3.5 to 4 percentage of returns on the savings account. And those banks which are emerging right now, which is not so big but are in surge, are in hunger of savings accounts, just like we can say, take an example of Kotak Bank. Kotak Bank is giving 5%, approximately 5 percentage of returns on the savings account. And if we talk about IDFC First Bank, this bank is giving 7 percentage of returns on the savings account. Why they are reducing, why they are increasing the savings percentage? Just because they want maximum amount towards their bank. They want maximum number of people to open the savings account in their bank, because once an account is opened, there are many few chances that that person will close the account and just go to another bank. So what they want to do is they want to gather as many public as they can, and as they keep establishing, as they keep getting bigger, they keep reducing the percentage of returns on the savings account. So this is what banks used to do. And as we were talking about the CASA percentage is the percentage of current and savings accounts total amount from the figure. Now, what is the figure? The figure is the total amount which the banks have from the savings account, from the current account, from the FDs, from the interbank deposits, from all of these deposits, the actual money which the whole bank is gathering, the percentage of current and savings accounts from this whole amount is known as CASA percentage. So most of the banks want the CASA percentage as maximum as possible, because on this CASA percentage, on this amount which the bank is gathering from current and savings account, they have to give less returns as compared to FDs. In FD, they have to give 7-8% returns. On loan, they are taking interest. So at the maximum, they are giving as less returns on CASA percentage. That is why a bank must have as maximum number of amounts of currents and saving accounts. I hope you got this particular instinct. I hope you got this point. This is very important. If you didn't, you have to pause this video and you have to listen the past 2-3 minutes again. Now I'm going to give you a live example of CASA. So let's watch it.
Let us see some live example of CASA percentage. Let's take an example of Kotak Bank. Here, if you can see Kotak Mahindra Bank account, here you can see CASA percentage is 56.17, which is very nice. It is a percentage of current accounts and saving accounts to the total deposit. So in case of Kotak Mahindra, the CASA percentage is quite good. That is 56 percentage. Let's take another example of Axis Bank. Axis Bank Limited. This bank is having a CASA percentage of 41.20. That is not that bad. It is quite good. So let's take an example of another well-known bank which is being trusted worldwide. That is HDFC Bank. Right now, CASA percentage is 42.23. That is very nice. HDFC is one of the best banks of the country. Let's take another example of SBI. If you can see State Bank of India, that is a government bank. Here the CASA percentage is 44.23, which is more than HDFC. But right now, Kotak is having the highest current accounts and saving accounts. And let's take an example of the Federal Bank of India, the Federal Bank Limited. CASA percentage of Federal Bank is 30.71. So this is what CASA percentage denotes, and this way you can see the live examples of CASA percentage. Now, how to calculate this, or how it will benefit us in the value investing?
As we just saw the live example of CASA percentage, that is current accounts and savings accounts percentage. So as you all know that every bank needs highest and more number of amount, the cash in deposit in their bank, so they can lend more money to all the people. So right now, let's focus on the next term, that is NPA, non-performing asset. If the bank is having more money, then how we can calculate that which one is better bank and which one is not? By looking at the NPA percentage, that is non-performing assets. If the bank is giving 100 rupees of loan, then how much amount is there which is not coming back to the bank? So NPA percentage shows us that how much percentage of the amount which bank has given or lended to the people is not coming back or not coming back to the bank. So this term is going to teach you about which bank is better in determining that to which people we should give money and which people we shouldn't. This is very important factor, because the main purpose and the main profit and growth of the bank is dependent on this particular ability of the bank to determine to whom we should give money and to whom we shouldn't, because which person can return back us the money with the interest and which person will just eat and run away with our money. So this is very nice, one of the basic terms which you have to learn, and let's take a live example of this.
Now let us see the live example of NPA, that is non-performing asset. Let's start again with Kotak. That how much is the NPA percentage of Kotak? You can just click on Kotak Mahindra Bank and you can click on peers. Here, just below the peers, you can see net NPA percentage, that is non-performing assets. That is such kind of assets which, if the bank is giving loan, then this much amount is not coming back, like people are not returning this much amount. So if Kotak Bank is giving 100 rupees of loan, then Kotak Bank is not getting 71 paisa back. So this is quite good, it is not bad, and it is decreasing as the number of years, like since past 5 years it was 0.95, since past 3 years it was 0.81, and since past 1 year it is 0.71. So this is quite good and it is quite decreasing, so it is very nice. Let's take an example of HDFC Bank. The NPA, non-performing asset, in this case is 0.35 percentage. See this difference, like this is on, if the HDFC Bank is giving 100 rupees of loan, then only 36 paisa is not coming back. So this shows that how good HDFC Bank is in determining the people on to whom HDFC Bank should give loan. Like the bank which is good in determining that to whom it should give loan and to whom it shouldn't, like to those people it should give loan that can return the loan back. So the bank which is having these kind of capabilities are always the best bank to invest in, and HDFC is one of the best in this category. Let's take another example apart from HDFC. Which else banks is good? Axis Bank. Let's take an example of Axis Bank Limited. The Axis Bank case, the NPA is 1.56. You can see in last 3 years it was 2.34 percentage, which is not that good. So this bank is quite like around in 100 rupees the Axis Bank is not getting back 2 rupees. So it is not that good as compared to HDFC Bank. Let's take another example of the Federal Bank of India. The Federal Bank of India, how much is its NPA? Its NPA is 1.31 percentage. Not bad, not bad. Like it is, Federal Bank and Axis Bank are on the same rate right now. If we compare about IDFC First Bank Limited, this bank is just on the verge of starting, so it is quite building a nice base. Yeah, that is very good, 0.94 percentage per year. So it is quite decreasing over the years. So IDFC is very building a nice base. So it is one of the good examples.
So as we just went through the net NPA percentage, now let's come towards the cost of liabilities. Cost of liabilities is like some banks are there which can, what they can do is they can give high number of percentage of savings account, like percentage of interest on the savings account, and they can increase the amount of deposits in their bank, but at the end they have to give the percentage back as returns, they have to give percentage on the FDs, they have to give back, so that complete rotation will make it equal. So at the starting, what maximum banks do to build their base, just like IDFC First Bank, what they are doing is they are increasing the percentage of returns on the savings account. Now how we can calculate that the CASA percentage is actually real, or it is just bank is trying to develop itself? Now we have to look towards the cost of liabilities. That tells us that how much percentage on an average the bank has to return on the amount which is having right now, the amount which the bank is having right now, how much on an average bank has to return in the to the users in the form of current account, in the form of savings account, in the form of FDs, how much on an average, how much percentage bank has to return to the people. That is known as cost of liabilities, and it should be as less as possible. Like in the case of Kotak and I think ICICI Bank, it is approximately 4 percentage, which is quite nice that amongst all the money, only 4 percentage of the amount on an average the bank has to return back in the form of interest to all the users, all the saving accounts users which have opened account in the bank. So this must not be 8, must not be 9 or 10, it is very high. So this, on this way you can denote that which bank is just increasing the CASA on the basis of savings percentage, and which bank is actually good and people are coming back to that bank to deposit money.
Let's see an example of cost of liabilities. Liabilities is a thing or amount which bank has taken from somebody else, and cost of liabilities percentage is calculated on that, on an average how much amount bank has to repay or has to give or has to distribute as interest on the amount which it is having right now. The complete amount which the bank is having right now, how much percentage on an average bank has to give interest. So let's take an example of IDFC First Bank. Here you can see the cost of liabilities percentage is 8.35 percentage. That is, right now it might be a possibility that IDFC First Bank is giving lots of returns in the savings account, but that is just a way to increase the CASA percentage, but it is not overall financially helping the bank or giving much profits to the bank, because bank has to give more money to in returns, more interest in returns bank have to give. That is 8.35 percentage cost of liabilities bank has to pay on an average, which is not that good. So increasing CASA, the complete, like IDFC Bank is right now giving higher percentage on savings account, so people are opening more and more savings account in the bank, but here company is not making much profit because company have to give 8.35 on an average percentage returns to the user on the amount which it is having in the form of FDs, in the form of interbank deposits, in the form of current accounts, the total amount which bank is having, so it has to distribute more. Let's take an example of Kotak, that how much it should be, because Kotak is one of the good banks. So here you can see the cost of liabilities is half of what IDFC is having. It is 4.46 percentage. That is just half of what IDFC is having. So here what it denotes, you already know that how what it denotes, that Kotak only needs to give 4.46 percentage of the total amount, like on an average this much percentage Kotak has to distribute. So, and despite the fact that Kotak is having one of the best CASA percentages, still Kotak needs to give only 4.46 percentage on an average. Let's see some other examples. Let's take an example of the Federal Bank of Limited. Here you can see the CASA percentage. CASA percentage for Federal Bank is 30.71, and let's see how much is the cost of liabilities. Here it is 5.26. Not that bad, but it is still good compared to IDFC Bank, because they are not giving highest percentage of returns on the savings account to just improve this CASA percentage. Let's take another example of ICICI Bank. Let's take ICICI Bank example. CASA percentage is 45.11. Very good. It is much better than most of the banks. And let's take an example of cost of liabilities is 4.45. This denotes that ICICI Bank is one of the good in these two ratios. In cost of liabilities, that it don't have to give much and higher amount for the money it is having right now. And also the CASA percentage is quite nice as compared to other banks. So these were the live examples of CASA and cost of liabilities.
So you just gone through or you just saw the live example of cost of liabilities. Let's move on to the next term, which is going to show us that the bank is getting profit or not. Is the bank really developing or not? Is the bank really getting good response, or the bank is having good ability to just determine which person which I should give loan to? How to determine this one thing, that the bank is getting profit over the years? Is the bank improving overall year the years? The term is advances growth. Yes, the advances growth shows that how much more percentage of amount the bank is giving in the form of loans to the users. Advances growth is just, see, in this country, in any country, every single person wants money. Every single person wants to buy some car, house, this and that. So everybody wants money, but the actual work of the bank is to determine to whom it should give money, so the net NPA percentage stays as low as possible. As in the case we saw in the HDFC Bank, the net NPA percentage of last 1 year is 0.35 percentage. That is, on giving 100 rupees, bank is only losing 0.35, like 35 paisa. So that is one of the best records. So, and the bank is having 21 percentage advances growth. That is just insanely good. HDFC is one of the best banks of the whole world. So advances growth is like, if HDFC gave 100 rupees last year as loan, right now companies, the bank is giving 121 rupees as loan amount. So 21 percentage increase in the advances growth. So this must be high, like above, at least above 10 to 15 percentage is a very nice figure to note in the advances growth. So like bank, to improve the advances growth, to improve the amount of money bank has to give as a loan, they must have good ability to determine to whom they should give money to. So you have to figure out which bank is improving, which bank is having higher advances growth, which is giving higher amount of loan to the people, and also having lesser amount of NPA, that is non-performing assets. So an actual, by giving loan, they are not losing money, they are getting more interest in return. So an actual bank is getting more growth. Let's take a live example for that.
Let us take the live example of advances growth. Advances growth is one of the best terms we have learned yet, and this will somehow connect with NPA, non-performing asset. Let me just repeat it once again. Advances growth is the percentage as compared to the previous year, how much more percentage of the amount the bank has given as loan to the people. The more loan it will give to the people, the better bank will grow, because the interest amount, higher interest amount it will earn in on the loan amount they have given to the people. I hope you're getting my point, that advances growth is the bank will grow as soon as possible when the loan amount it is giving it is higher. Now in India, most of the people wants loan, like every single person wants money. So it is not like giving money to all the people who cannot return the money. It is finding the right person to give loan to and getting the interest amount back to the loan. So it is directly compared to the NPA. Bank should have lesser NPA and more advances growth. That means that that bank over the previous year, over the years, bank is improving. It is giving more loan and getting more interest on the loan. So let's take an example of ICICI Bank. Here the advances growth is 10%, which is not that bad. Let's compare this 10% with other good banks, just like Kotak Bank. Let's take an example of Kotak Bank. Here if we see the advances growth, it is 6.83%, which is not that bad. But right now the growth percentage of Kotak is quite less. That is, Kotak is not growing in that much speed that it should be. Let's take another example of one of the best banks, that is HDFC Bank. So here if we see the advances growth, 21 percentage point 27, like 21% is the advances growth, and the HDFC Bank is having 0.36 percentage non-performing asset. That is, as compared to the previous year, HDFC is giving 21 percentage more loan to the people and getting more amount as loan interest, and the company and the bank is also having so less non-performing asset. That is, bank is so good in determining that which people they have to give loan to and which don't. So this is one of the best banks. And let's take another example of the Federal Bank. Let's take the example of Federal Bank Limited. Here if we check the Federal Bank account, here the advances growth is just like Kotak. It is 10.93. Kotak was having 10. So it is, yeah, it is quite good, 10.93, but not that much. So this was a few examples of Federal Bank of advances growth.
Now we just saw the live example of advances growth. Now let's move on to the next term, which is one of the best terms and you will find it very interesting. That term is capital adequacy ratio. How a bank can have more growth by giving more loan, and how can a bank can give more loan? They should have more amount deposited in their bank to give loans. So capital adequacy ratio tells us that how much amount the bank is having with respect to the risk weighted assets and the amount which bank has to repay as interest. So how much percentage of the capital bank is having to actually increase the actual growth, the advances growth of the bank, how much percentage capital adequacy ratio the bank is having to improve the advances growth as soon as possible, to increase the amount of money which it can lend to more people and to increase the amount of money which it can have back as returns. So capital adequacy ratio must always be higher than 12, higher than 13, which is a good percentage. Lesser capital adequacy ratio displays that bank is not saving money, bank is not having money, which is just limiting the bank to improve the advances growth. So it is just like taking the money and giving it as savings account percentage, giving it as you can say FDs, and not getting the money back from loans. So that is the one of the results of having a lower capital adequacy ratio. So let's take a live example of CAR ratio.
Now, as we already talked about, that a bank should have money, should have the capital amount to distribute loans, so it gets more and more amount of interest in return. So how to check that how much amount bank is having or how much cash it is having? You have to go at CAR, that is capital adequacy ratio. The more and the higher this ratio is, above 12 percentage, above 13 percentage is a good ratio. So the more this percentage is, the higher advances growth the bank can have, the higher amount bank can risk to give loans, and the higher profit it can make by getting more interest as loan amount. So let's take an example of Federal Bank. Here you can see capital adequacy ratio is 14.35 percentage, which is not that bad. It is quite good. That bank is having good amount of cash. If we check about Kotak Bank, if we see the Kotak Bank adequacy ratio, that is 17.89. So that means Kotak can improve the adequacy growth as soon as it possible, because it is having quite good number of capital as for which is available to give loans. 17.89 is a very good ratio. It is the ratio of a bank's capital in relation to its risk weighted assets and current liabilities. That is how much amount the bank is having, and how much returns it has to give, or how much loan they can give more to the people. So 17.89 is a very nice percentage. Let's compare this with the Axis Bank, how much Axis Bank CAR percentage is. If we check here, the CAR is 17.53, so it also has chances to improve the advances growth as soon as possible. That is very nice factors right now. Apart from Axis Bank, if we want to check about ICICI Bank, so we can go towards ICICI. Here the CAR percentage is 16.11, so also it is quite good, not that good as Kotak, but yes, it is having good amount of cash, good amount of balance amount to give loans and to give interests. And let's check about another bank, which is IDFC First Bank, which is a just emerging bank. So here if we check the IDFC Bank, it is 13.38, which is still good. As I already told you, above 12 percentage, above 12.5 percentage is a good amount. So for a bank which is just building right now, 13.38 percentage is quite good CAR percentage.
So as you just saw the live example of capital adequacy ratio CAR percentage, so let's go through the complete overview of the whole video, the first video of banking sector analysis. Firstly, we discussed about with example of CASA percentage that a bank should have maximum number of current accounts and saving accounts, so the bank gets higher amount inside the bank, so it can lend more amount and get more amount in return as interest amount. So bank should have maximum number of CASA percentage, that must be 45, 55, 80, 70, no, but not that much. Now not that much, why not that much? Because many banks can give higher number of savings account interest rates, that is 7 percentage. That is just an example of Kotak Bank, that it gave many ads of 7 percentage, and then when the bank started building up, it getting reduces, and now it is giving 5 percentage of savings account returns. So yeah, so bank shouldn't give that much higher percentage of savings account interest, because that is not actually helping the bank grow. It is just taking the more number of savings accounts. So that is also one of the factors which we have to note. So bank overall should have higher CASA percentage. Second thing which we discussed is bank should have least amount of NPA, that is non-performing asset. Banks are lending the money, but banks should lend the money to the right person, which is able to give back the money, that is return the money which they have taken from bank. So bank needs to be as good, that ability of determining which people they should lend to must be as good, and that determines the quality of the bank. Thirdly, we studied about the cost of liabilities percentage. Cost of liabilities is very important term, and you have to learn about cost of liabilities. Secondly, after that, which is directly connected to that, is advances growth, that how much more bank is lending, as how much more loan they are giving to the people, which as compared to the previous year, how much more percentage of loan they are giving out. The more amount they give out and the higher interest they earn, which improves the overall capital adequacy ratio CAR percentage. The more amount bank is getting in return, the more amount they have as the profits, and the higher the CAR ratio is, the higher the advances growth can be. So you have to figure out that banks should give as much loans, have as less NPA percentage, have as high CAR percentage, and have as high CASA percentage. So from this video, I hope you got to learn all of these terms combined. It is very easy, not so hard, but if you have interest, then definitely you might have just completely went through it and have understood it, all of these terms. I hope that you are very excited, and I know that, I know personally, I know, and I can see in your eyes that you are very excited for the next second part of banking stock analysis, which we are going to live very soon. So just revise all the previous terms: enterprise value, market capitalization, PB ratio, book value, PE ratio, enterprise value. Yeah, we already said that, I know that. So you have to just revise all of these things, and then in the next video we are going to learn about much more factors, and I can assure you that after the next video you will be very good in analyzing the banking sector stocks, and you will find it very exciting and you are going to kill it. So let's just revise all these things again. If you have any doubt, you can pause this video and you can go back. In the descriptions we have all the thumbnails, and we have all the, you can see the timestamps, so you can easily get to a particular point of the video if you have any questions. And also, if you have other questions regarding this video, you can comment down in the comment section below. I would love to answer that any single time. You just have to let your values, let your questions be here in the comment section, so I can read, I can reply to you, and you can get most values. The main purpose of making this video, the biggest purpose of it, this just setting up all this value investing series, is to just let you know everything, each and everything which I know, so you can also learn to invest and can get maximum amount of money which is floating in the stock market. So I hope you get to learn the best. I hope you stay happy, your family be healthy, and you keep learning and you become the best value investor of the whole world. I hope you be healthy. Keep learning, guys.